And so the emotion right now is really bullish gold. Sentiment is really high, not retail wise, but in the bigger picture, looking at the institutional side. So I think that everyone expects it to continue to go higher. 3,000 is just around the corner. Someone could take me to task on the comments and say, well, wait a minute, David, I sold my house for Bitcoin or I sold my car. And that's true. So in that case, you could liquidate your Bitcoin, but that's rare. But in the means of gold, you have the option. I could take the gold and use it as final payment, or I could convert it to currency of my choice. But that type of transaction really doesn't occur much in the Bitcoin world at all.
One distinction stands out in the ongoing debate between Bitcoin and gold. Gold is the senior market, a timeless store of value ingrained in human history. Bitcoin, by contrast, has carved out a different niche, functioning more as a vehicle for capital flight rather than a stable store of wealth. Currently, gold is surging, while Bitcoin remains volatile and range-bound. As the saying goes, gold is for war. Bitcoin is for flight. The former may precede the latter, and both could ultimately rise. But that remains speculation. David Morgan, publisher of the Morgan Report, highlights the overwhelmingly bullish sentiment surrounding gold, particularly among institutional investors. He warns that escalating global tensions, a collapsing middle class, and the decline of the US dollar make gold the ultimate safeguard in uncertain times. To secure financial stability, he stresses the importance of owning physical gold. Gold demand continues to rise amid US trade uncertainty, with spot prices reaching $2,943 per ounce. Despite a strong dollar and rising bond yields, factors like tariffs and geopolitical tensions fuel this rally. Experts suggest that while gold may soon surpass $3,000, short-term traders should remain cautious. In contrast, Bitcoin remains highly speculative. According to CoinMarketCap, Bitcoin has risen by 4.04% year-to-date. Its price movements have been highly volatile, particularly following post-election rallies. While Bitcoin has occasionally breached the critical $100,000 resistance level, regulatory uncertainty and panic selling among retail investors have contributed to price declines. Morgan further contrasts gold with Bitcoin, arguing that gold has historically served as a final means of payment, whereas Bitcoin does not function similarly. While some individuals have sold houses or cars for Bitcoin, such transactions remain rare. Gold, by comparison, offers the flexibility of being used as a direct payment or easily converted into any currency. Gold is final, quiet, and anonymous, Morgan explains. In his view, Bitcoin remains tethered to the dollar-based financial system, while gold is a truly independent store of value. Now, let's break down what this all means, of course, with David Morgan. Before we continue, let's take a minute to subscribe to our channel and hit the bell icon for more timely updates.
But to examine a little deeper, when you have a hodl situation, hold on for dear life, that's what's called the float. So like in the stock market, you might have 1 million shares out, but 98% of them are tightly held. So the float, the amount that's available for purchase, is extremely small. And that's the Bitcoin world. So any new buying will take the price substantially higher. So now we're in a position where Bitcoin's roughly $100,000 per Bitcoin. It cost $100,000 to mine a Bitcoin with Marathon Riot and the third biggest miner in the United States. So they're break even. So now you got to get a big buyer to come in so that the insiders can sell off, just like in the stock market. So, hey, let's get the U.S. government involved. They'll pay $100,000 per Bitcoin. So they need a market. So they're trying to create one. So they have liquidity at that extremely high price where no one average can buy a full Bitcoin. No one can write a check for $100,000. That's an average worker out there. And so who has that kind of clout? Well, the government does. They'll just print up some more money and they'll create a sovereign wealth fund with gold and Bitcoin. Well, gold, yeah. Bitcoin, forget about it. But that's the reason. So there's not a lot of transactions going on in the real world of Bitcoin where the whales are able to start selling my 10 Bitcoin, my 100 Bitcoin, my 1,000 Bitcoin, my 10,000 Bitcoin. And there's people like that are billionaires in the Bitcoin world that bought it at a penny or mined it at a penny or 10 cents or whatever. So they need liquidity. And the only way to get liquidity is for somebody to come in. It's like a Ponzi scheme. When you get near the top, you need new buyers to buy in and you start running out of buyers. So what do? You do your best to find new buyers. That's Bitcoin. Who are the new buyers? Oh, let's get the U.S. government involved. And what's interesting about Bitcoin is gold is outside of the realm of the real world. I have a gold coin on my desk, but we'll use a silver one. But that could be a means of final payment. That's it. But you can't take a Bitcoin and that's final payment. You've got to use it, for all practical purposes, get into Bitcoin with US dollars and get out of Bitcoin with US dollars. Yes, you can do it in other currencies, but you get my idea. It's a dollar-based system. It's not independent. Now, I'm not saying, someone could take me to task on the comments and say, well, wait a minute, David, I sold my house for Bitcoin or I sold my car. And that's true. So in that case, you could liquidate your Bitcoin, but that's rare. But in the means of gold, you have the option. I could take the gold and use it as final payment, or I could convert it to currency of my choice. But that type of transaction really doesn't occur much in the Bitcoin world at all. In almost all cases, the lion's share are certainly changing dollars to Bitcoin, Bitcoin back to dollars. Whereas you could go from dollars to gold and stay in that gold realm. Look at the John Wick movies. I mean, what does he do with the cleanup crew? He pays them in gold, final payment, quiet, anonymous, and we're both happy. You got paid and I got a service.
Gold retreated from its fresh record high as traders took profits following comments from U.S. Treasury Secretary Scott Bessent, who dismissed speculation about revaluing the country's gold reserves. Addressing plans for a sovereign wealth fund, Bessent clarified that such a revaluation was not what I had in mind. His remarks appeared to downplay the idea of adjusting the official gold price, set at $42 per ounce in 1973, to current market levels, which could generate a one-time windfall of approximately $750 billion and reduce the government's reliance on bond issuance. David Morgan notes that the balance between gold reserves and paper currency was significantly different before gold's revaluation from $35 to $42.22 per ounce. He believes that while revaluing gold to its market price wouldn't eliminate the U.S. debt crisis, it could help reset economic perceptions by reintegrating gold into the monetary system. Though not a definitive solution, such a move could provide much-needed stability to the financial system in an era of rising fiscal uncertainty.
It's pretty simple. There's an official price of gold that the Treasury uses, which is $42.22 per ounce. And then there is the market price of gold, which, Kitco and ITM trading and, all kinds of places, the COMEX, what the daily fluctuations in the gold price is. And right now it's roughly 2,950 US dollars per troy ounce of gold. So there's the market price and there's the official price. So the revaluation, gold's a constant. An ounce of gold's an ounce of gold anywhere in the universe. So what changes? It's the paper that changes. How much paper's been printed during, a given time frame. In other words, when gold was at $35 the ounce before it was revalued to $42.22, how much gold was there versus how much paper was backing it, or how much gold was backing the paper? So right now, we've been off the gold standard or dollar standard tied to gold from August 15th, 71. And in that time, there's been massive amounts of increase in the currency supply. And so now the market says it's $2,950 US, 4,000 Canadian, whatever it is in other currencies. So obviously the market's telling us there's been a massive amount of currency produced in those 50 plus years. Now what's happening is the United States at the financial level, Treasury, Fed, whatever, is talking about revaluing the currency to match the market price of gold. And if that were to occur, it would be a massive increase. You take 42 and divide it into 2,900. That's a pretty big multiple. And so that would bring the gold balance in today's terms in fiat to about rounding up about $800 billion. So $800 billion is certainly enough for me to get by for a few years. But in terms of how much debt we have, which current account deficit's 36 trillion, if you round up the 800 billion to 1 trillion, you round it up even further, that's only 1/36th of the debt. So it really doesn't do a lot to help the balance of, or our debt situation. Now it could help, readjust people's thinking, bringing gold into the monetary sphere, bringing some stability. And I interviewed Dr. Judy Sheldon some time ago, As Good as Gold, her book about how to put gold back in the monetary system. And that's basically using it as a tie to issuing United States treasuries, especially the long bond, or we might even go 50, maybe 100 years. My words, not hers exactly, but the concept, which I think is a pretty sound concept, to try to put some stability back into the monetary system. So hopefully you didn't over answer the question, but it's to bring the balance sheet of the United States into a better position, which it would. But when you measure it against the amount of debt outstanding, it's really not that significant.
Recent reports have fueled speculation about a possible U.S. return to a gold-backed currency, though experts argue this remains unlikely within the current fiat-based monetary system. Meanwhile, gold's extended rally has prompted analysts to increase their price forecasts, as previous targets have been exceeded ahead of schedule. Goldman Sachs recently raised its year-end 2025 gold price forecast to $3,100 per ounce, up from $2,890. Similarly, UBS adjusted its 12-month target to $3,000 per ounce, an increase from $2,850, while Citi set a new short-term price target at $3,000, with its average forecast for the year rising to $2,900 from $2,800. If the financial system faced a major crisis, would governments turn back to gold as a monetary anchor? We value your thoughts, so feel free to share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.